Hello and welcome to this week's webinar. My name is Nathan Batcher and I'll be your host for today. Before we begin, I'm just going to read through this disclaimer. Please feel free to read along as well. Beyond Trader LLC is strictly a research publishing firm. The information we publish is based on our opinions plus our statistical and financial data and quantitative models. This service is not registered with any financial agency such as the SEC or any other organization or governmental body. By using our platform or our services, you acknowledge that we do not provide personalized recommendation or advice. Alternative asset classes are volatile investments and carry significant risk. Please do your own research before making any financial decisions. Okay, so on today's agenda, we're going to be doing the educational topic as always on a Sunday. This week, I'm going to be discussing important trend lines in the market. The reason I'm going to be discussing important trend lines is not only because it's something personal to me, but because I often study important trend lines in the market myself. But Bitcoin has recently moved towards an important trend line area in the market. So I'm going to kind of merge the two topics together in the webinar today. And that kind of brings it with the relevance to the current market and also the price action. And I'll be showing some interesting trend lines for a couple of altcoins as well in the market. And I'll also be doing the Q&A session towards the end. So as I said, today's topic is going to be important trend lines. And I'm going to try to break it down as best I can, how to use these important trend lines in the market. So obviously, there's some key considerations that we have to think about when drawing trend lines in the market. Something that I've found is that trend lines are only as good as the person who's drawing them, meaning they can be very personal to one person, how they draw them, and also subjective. But I think, we have to consider a person's experience and how successful they have been using them before and what type of logic people apply when using them. So, for example, something very simple, like this chart you can see in front of me, and you can see here, this is a headline. This is the neckline of a head and shoulders pattern, and you can see it's been used in the market various times, but more on that later on. But I would say the drawing of the trend lines should also be accompanied by logic. If there's no logic there, then there's no reason to have it there. And also past performance, what has happened around that trend line before, and also the evidence surrounding that trend line that is going to be used in future. So with that said, I go back to the previous drawing, but yet on a different time frame, and that's the monthly time frame, and we can see that same head and shoulders pattern there, the neckline of it. Not only was it the breakout area to the downside in 2022, but it was actually the post ETF high. After the approval, the market tested that trend line, fell down towards 38,000. And when we broke through it, that was also the breakout trend line. So if we go back to what I say before about logic and reason on the charts, it makes a lot of sense. If Bitcoin has started to collapse, like it has done over the last few weeks, then that would be the area that is tested. And so far, it's encouraging that we've bounced back from that area, but yet more evidence of it being that trend line being important because it's coinciding with another factor, and that's Ichimoku analysis on the monthly time frame. And we can see this Ichimoku support here, and it's also coinciding with this important trend line. So not only do we have the factors on the left of the page, but also the trend line that I've spoken about, the post ETF high, the breakout, the retest, the in line with the almost perfectly, exactly perfectly, in fact, with the Ichimoku support there. So this is how we can incorporate trend lines, and when we know we're in the right direction and right track when we're using them. Something that's often overlooked and misunderstood is that the higher the time frame, the more weight that we should place upon it in terms of being relevant. So, for example, the daily, the weekly, and the monthly time frames, they will be very important. So we should give more weight to the higher time frames, whereas the lower time frames, they will only speak to the short term. But if we're looking at perhaps medium to long term targets, then we need to look to probably the weekly and the daily at the very lowest, and obviously the monthly at its highest. So if we have something here like a daily trend line, I've taken this before, and this was actually before the collapse in the market. and this trend line comes in at around 54,000, or just slightly below it, and this was actually the bounce area. So on a daily time frame, we have this trend line, and it also matches up with this trend line. So this is one way we can combine higher time frame analysis together in perfecting our trend line drawing. And trend lines can also be used to not only identify support areas, but also targets where the market could head to in future. So that's something to bear in mind when you're drawing trend lines. And we can see here, if we wanted to draw a trend line that's not only symmetrical, but also can be used as a future price target, and also can be used with some type of logic as well. We could see that the former all-time high from 2021 to the former all-time high until this year, if we attach them together, then we get the target of 90,000, and it also symmetrically fits in very perfectly with the trend line that I've just mentioned on the monthly time frame, which is also measured the same on the weekly time frame, and it fits in well. So if this is the bounce area, then we can conclude that we go towards that other time frame. So when we're looking for trend lines, we not only try to find trend lines that might fit, but also symmetry comes into play here, and also logic again. So that's a way how we can identify these time frames. And also the angles can be quite interesting. If it's a sloping angle to the upside, that means it's more likely to act as stiff resistance, where if it's falling to the downside, as this is here, then it means that the price is more likely to bounce from these downsloping trend lines. Something that I've found over time as well, that this often occurs, and the slopes of the trend lines are sometimes not spoken about as much as what they should. So as well as the slopes of the trend line, we also have the breakout trend lines as well. So as well as the mentioned symmetry here, you can see that the three trend lines here, they're interacting together very nicely in stages. So the top and bottom symmetry is almost perfect, but also we have the downsloping trend line, which means it's going to be almost a perfect breakout trend line, and that's sitting perfectly in the middle between these both trend lines. So this is alluding to the fact that if we break above 72,000 and we hold above there, this trend line here is going to act as a springboard for 90,000. So the downsloping nature, all-time high to the former swing high, and that's acting as a perfect breakout trend line inside these two trend lines here. So you can see again logic, reason, symmetry, and the angles all working together very nicely. And finally, what you believe to be the important breakout levels in the market, I would say this is where it really comes together, knowing again when you should be in the market and when you should be out of the market. And there's three very, very telling opportunities here within these three trend lines. Firstly, if the market breaks underneath here next week, then we know that the chances of a much more severe a decline to 36,000 are increased. However, if that doesn't happen and we start to bounce and probably get towards 64,000, and we start to move above this breakout trend line, then we know that the chances of moving towards 90,000 are very, very high. And what's more interesting is that if we move above 90,000 and we stay above there, then we have another scenario there. We have a mega breakout in play, in that if we measure 90,000, probably all the way down to about 60,000, we know that there's an opportunity for the market to break out by 30,000, because it's moved out of this symmetrical frame here, and it's moved into this parabolic breakout. And it's also the upsloping nature of the trend line. When we know we break above these upsloping trend lines, it alludes to the fact that there's going to be a mega breakout in the market. So I hope these are things that you haven't come across before, and these are kind of a combination of the things that I've learned about drawing trend lines over the years, and just how powerful they are if you understand them, and if you can put logic and reason against them. So having a look at the relevance to altcoins at the moment, and I think Ethereum's a natural candidate, because we've got a pretty bearish chart for Ethereum at the moment, and we can see that it's done something very different to Bitcoin, in that it moved towards the neckline of this head and shoulders pattern, and it wasn't able to break it. And again, on the second attempt, we failed there. So we knew that there was going to be some type of stiff bearish correction coming up for Ethereum. Although ultimately, I still do believe that we're going to have a new all-time high and then probably exceed that by a magnitude of a number of thousands. So if we have a look at this kind of symmetrical pairing that we're sitting in front here, then we can make a couple of observations. Firstly, this is the bear market low, and here we can see a trend line, former low there, and the market's tested, got above it, it's testing, it's getting again, it's coming in beneath that test, and again it's gravitating towards this trend line all the time. And we can see when we've come back up, we've tested towards the neckline again, we failed, and the retest has been perfect of this trend line here. So in theory, we should bounce back towards 4,500, and then we should get a new high equal to 4,500 to around about 2,700. So we should be looking very, very roughly at around 1,750 above there. So that's going to take us probably to about 7,000 range. So you know that you don't want to be short Ethereum while it's trading above 4,500. Alternatively, if we break underneath here next week, then we're falling to the unfortunate area of 2,179. While I wouldn't rule it out, I'd say I've got about an 80% probability that the market's going up there, given the factors that are going on in the world right now with fiat currencies and so on and so forth. That's just kind of the way that I see it. But again, how we can use interesting trend lines. I guess my penultimate example is going to be Chainlink, and this is a really great example. So you can see here, this is the base of this consolidation area here. There's no bones about it. You can see the former consolidation area high, another high there, or the highest high towards that former rebound high. And this is the breakout trend line for Chainlink from $10 to $23. And this is the exact area where we've come to bounce and retest here again. So if we were to fall underneath here, then we could probably get a catastrophic kind of fall off here. But this is also the natural area where Chainlink could come back and retest. Again, here we can see that the trend line here that we want to watch out to the upside is the neckline of this head and shoulders pattern here. So if we get above there, it's probably about $16-17. If we break above there, then we're probably going to get substantial breakout to about $17. And the more interesting part here is the much larger picture here. As I've discussed previously about higher time frames analysis, we can see that the neckline of the head and shoulders pattern is the target and is probably going to come in a couple of weeks about $35. And that hasn't been tested yet. So if we continue to hold above this area, we're going to bounce and hit towards around 35. So beware that there's a big trade probably coming if that happens. We're moving on finally, probably the most classic example of a breakout trend line, and that's Chainlink. So if we see this ultimate breakout trend line, which is probably going to come in just under $20, then there's a strong chance that this is going towards 50. I kind of say that categorically now because we've got two former all-time highs. It's a down-sloping breakout trend line. It's on a high time frame like the monthly. So beware of Chainlink, that under no circumstances do you want to be short if we're holding above this trend line. And finally, it's much the same for Ripple. If we break above this trend line, then all bets are off, and we're probably going to go towards $1.50. So there's going to be some interesting times ahead in the next couple of weeks if we start to bounce from current levels. And I hope you've enjoyed what I've shown you here today with the trend lines. I do have a question come in, and that's do I see ETH getting a boost with the ETH ETF start trading in the US? Yes, I really do. I think we probably won't be as obvious as what most expect it to be, but I can definitely see that there's a case. I'm going to go back to the Ethereum chart here of what I think is probably going to happen. I can definitely see that there's going to be some type of case for Ethereum bouncing from here, sitting around that kind of mid-range, around 3,500, and if we get above there, then 4,500. So I think for me, the more interesting part is the defense of 2,800, 2,700. over the next couple of weeks. If that happens and we moved above 3,500, then um, we should probably see something special for Ethereum. And you're going to be easily looking at 7,000 at the end of 2024 and 2025. Okay, if there's no further questions, I hope you enjoyed today's webinar, and let's hope the market can recover next week. And I'll see you again on Thursday. Thank you very much.